Hello, chart watchers and DecisionPoint faithful. Welcome to this Thursday, actually April 30th, as far as the presentation goes, but we are recording this Wednesday afternoon for you. We welcome you to the show. I am your host, Erin Swenlin. I'm here with my dad, Carl, and we welcome you. If you haven't ever watched our show, we do hope you come back and watch us again on Thursday mornings. So let's go ahead and start getting started with what we're going to talk about here. We're going to look at that market overview today, Wednesday. We had a huge rally, of course, so we'll be looking at those. We had some stocks in the news. Gilead was one of the big ones. We had Microsoft, Facebook, and Google all reporting their earnings today, so we'll look at those charts. And speaking of earnings, we have more on the S&P 500 earnings right now, and Carl has his chart that he will be showing you. If we have some time at the end, I thought I would go through a few possible diamonds in the rough. I don't publish on Wednesdays, but I thought I would just give a few to our viewers. So let's go ahead and get started. And I want to look at first some of those signals, but before I do so, welcome back to the show. Dad, how's it going?
Okay, pretty good.
Pretty good, pretty good.
Yeah.
The weather's gotten a little too hot for us here, but I'm glad the air conditioning's working. So,
Right.
all right, so here we go. So let's go ahead and look at our signals, the DecisionPoint scoreboards. This is kind of our major indexes. We have these on the StockCharts homepage under DP signals. You can find them there. Basically, the interesting thing to note would be that the NASDAQ 100 did give us last week a intermediate term trend model buy signal. That means that 20-day EMA crossed above the 50-day EMA. So we added that signal, but you can see the rest of the index is still lagging behind somewhat, at least as far as those signals are concerned. And our sector scoreboard, we have added a couple more green blocks here. Healthcare is now on an intermediate term trend model buy. Again, that means the 20-day EMA is above the 50. Long-term trend model buy signals for technology and healthcare, those are 50 to 100-day EMA positive crossovers. So the golden cross, as we often call it. So we've had golden crosses on healthcare and on technology. This one has been here, I think. Did we ever lose that technology long-term trend model buy signal?
No, we never did.
We never did. So, all right, well, let's go ahead and look at some charts and talk about the market. I'm going to let you start it off. I know you have, did you have some market charts you wanted to start with?
Sure. Okay, sharing.
There we go.
Maybe I'll get to that one later. What I wanted to look like, we had this big rally today thanks to Gilead Sciences announcing a treatment for the virus, and it's still in testing, so it's not going to be out for months, I'm sure, to the public, but that kind of good news. And then the idea that we're getting back to work is helping quite a bit with getting the market rolling. Another event that we had today was Uso Split, had a reverse 1-for-8 split, which means for every 8 shares you owned, you received 1 share. And that has the effect of
bringing that price
bringing way up, yeah, way away from the zero line. I was noticing on Friday, I mentioned it in the weekly wrap, that because it was down around $2.50. And I looked at these charts this morning and said, what? But did I completely get it wrong on Friday? And then I dug around and found out, yeah, it had splits. So one of the things that it does when it splits, that we now have, instead of 2.5 points from the zero line, now we have about 20, 19, we'll say, points before it hits the zero line. And this is what I like to call, when it's down close to the zero line, you have what is called ground effect. This is from my flying days when you were coming in for a landing and you got close to the runway and you started to flare out. As you got close to the runway, the air would become compressed between the runway and the bottom of the wing, and it would give you a little extra lift, and you have to be aware of that, or it would, you might flare, might bounce up a little bit too high. Anyway, that's what happens now. Now that whereas we had only 2.5 points to go down to zero, now we have like 18, and that's quite a ways, and it's the limit. The downside limit is quite expanded now.
So really, when you get those reverse splits, it does help so that you actually have a little bit further down to go. And I did have a listener, or a viewer, I should say, for our live trading room that Mary Ellen and I do Tuesday and Thursday mornings. Just sign up for our free email list and you'll get it. But I did have a viewer ask me about whether USO would undergo a reverse split. And I said at the time, obviously, that I didn't know. And I think that USO was still at that point at least above $5. Maybe it was down to $3, I don't know. But at that point, I said that I didn't know, but it would make sense for the reasons that you were just talking about, and then once we get those prices that low, then there is room for it to go down, and it doesn't have to become a penny stock in the meantime. So I guess let's go ahead, and I know that you have your earnings chart. If you could bring that up and explain what we're seeing right now as far as the earnings that have actually come in and been recorded.
This is where we looked what it looked like last week, and we finally got in a chunk of earnings this last weekend, and I plugged it in. And these are projections for fourth quarter. This is where those bands were projected to be fourth quarter of this year. This is what happened after I got the new earnings projections for that. And you can see it's dropping quite a bit.
Yep. I wonder if we'll see something similar to that 2008 dip that we saw.
Yeah, it wouldn't surprise me. Everything's being forgiven right now. So anything that they're carrying on the books, they're going to dump into this, and nobody will notice. So yeah. It'll clean out a lot of junk, which is just as well. But I had this week, 40% of the S&P 500 stocks are reporting earnings. So by the end of this week, we'll have reported earnings on around 55% of the index components. And I expect we'll have an update early next week from S&P to find out what the new projections are for Q4.
So we probably will have that for the next show.
Probably, yes. This is the short-term chart that we keep on earnings. The PE ratios is updated every day. Earnings, this will be coming down. And
yes.
The yield, this is updated daily, annual dividend. And then we have payout ratio. I added this panel. Payout ratio just is the ratio of dividend divided by earnings. And it should always be less than zero. If you get it, in other words, if you're paying out 3 times what your earnings are, something's wrong. Something's going to change to the bad on your dividend pretty quickly, probably.
Mm-hmm.
I'll save that for later.
Okay.
For later. I wanted to show that's not it. There we go. This is a, I don't know if you've ever seen this before, Erin.
I have, not for a while though.
Okay, Case-Schiller index, basically home prices, different markets. This is the U.S. and this is Chicago. But for our area out here, we have gotten higher. The prices have been higher than they were back here. That's not such a great thing, really, because
Wow.
it costs, yeah, it costs a lot of interest income to savers to get it up there. Um, this is the inflation adjusted uh, index, and you notice that it's for all that money that the Fed was stealing from savers, it increased inflation, and so inflation adjusted. It really, we haven't gotten back to this overpriced area at all, but we are still overpriced. That I just wanted to show you. That's real estate decoded, DECODED, DED.com. That's where you find these charts.
So what are you thinking about the housing market right now? I know we've talked a little bit because I just sold an investment property last month, just in time. I don't know. I've been noticing that the home prices are starting to fall with the whole virus thing, but do you think that we're going to see that continue on?
I think they're having some problems right now. Yeah, I don't. I think that we're going to. This is what I think. I think we're going down again.
Mm-hmm.
They were overinflated artificially, so it just with all these other things going wrong, it's going to be hard to keep them up there.
Right. All righty. Let's see.
Let me look at one other chart here. This is what happened today. Notice it, even though it's a big rally, it was really not that far above yesterday's high. And, you know, increased volume. We hit the oversold band on the inverted VIX scale here.
Overbought, overbought.
I'm sorry, yes, I do that all the time.
Me too.
And then you notice we've got a negative divergence here.
Oh, yes.
We're not getting volume appropriate to the new highs on this rally. So that's what happened today. And I'll turn it back to you.
All right. Let's see here. Okay, I'm going to look at, let me grab it. I was going to look at some of the stocks that we were just talking about that did report earnings besides Gilead. I mean, the Gilead chart, I think, is looking extraordinarily nice right now. Full disclosure, I do own this one. And you can see that the PMO, let me get this out of here. There we go. The PMO has turned up, so now we have a top or a bottom above the signal line. It is what you might think of as an overbought territory there for the PMO. I'd be curious if we've seen those kinds of ranks there on the PMO. Yeah, we have seen even higher than that. So it is overbought per se, but there's certainly a room for it to continue higher. The weekly chart, I think, is the interesting one here. There we go. So this is more of a straight up rally. I'm not really seeing this as a parabolic. You know, we had this rising trend. It was a lot more tame, less steep, but then we went into this, shot to the upside. Of course, this is volatile. We had plenty of down weeks within the rising trend here, but we've overcome this area of resistance and it's managed to stay there. The $85 level does seem to be the interesting place though to watch to see if it can burst through that overhead resistance, but I suspect we will see that. in the future here. But let's go ahead and look at Microsoft, which reported earnings today. And one of the things you can do here on StockCharts is this symbol summary. So I'm going to show that off just because it's helpful. So it tells you that they reported earnings today. And what I like to see is that we do have after hours trading numbers here. So after earnings, we are seeing Microsoft up almost 2.4% in after hours trading. And of course, this doesn't always translate to what you're going to see the trading to be tomorrow, but always interesting to look at. And, you know, we've got that high scooter, but what I want to look at, of course, is the chart. So let's bring that up. I'm going to make this a little bigger. All right. So
But it's not making a new high,
no.
as you know, in the rally phase. So that's interesting.
Yeah, I mean, the OBV is certainly not, you know, it's confirming this as a decline right now. So we'll want to see that volume pump up, and hopefully I would think if we do get a breakout here, we do want to see that OBV come up and at least challenge that previous top that was set here with the price top. And if we don't see then we consider that a reverse divergence, meaning that despite having extra volume, or despite the price, I'm sorry, I'm getting this backwards, help me out here. So we want to see it come, if we get a breakout, we want to see consistent rising volume that supported that. And otherwise, we're looking at a reverse divergence, and we want to see them happen at the same time. Does that make any sense? I hope so. Anyway,
Yeah, it would be it would just be a negative divergence.
Yeah, negative
But
divergence.
you don't want, it doesn't need to do it tomorrow, say,
Right.
if it does break out tomorrow. You don't have to, it doesn't necessarily have to break out BV wise.
Right.
But
It's
it
something
should
though that we will watch.
quickly.
Absolutely. Does look like a flag formation, and we are seeing the price holding that 20-day EMA, which I think is also constructive. We have the PMO, while it is overbought, you can see with today's trading anyway, it's starting to accelerate and move upward. It was already starting to curl over and curl down. We can see RSI, it's in, you know, above the net neutral, we call it, above 50, and it's not hitting that 70 level, which would be overbought. So that tells you that the price is not overbought right now. There's certainly room for it to go higher without becoming overbought. So I'll be watching that one very closely. I think I had that one as a diamond a while back here at the end of March. So I think I had it as a diamond back in here. So we still got a nice rise from that. But notice that on the weekly chart for Microsoft, we do have a weekly PMO buy signal that looks like it might log on Friday. We won't know for sure until after the market closes on Friday and we get the final weekly numbers on the weekly chart. And that's when we'll look to see if we have that buy signal on Microsoft. But I have to say right now, I'm looking at this as more of a flag formation. I think there's certainly an opportunity here for Microsoft to at least challenge its, I believe, an all-time high over there at 190. The other one in the news, Facebook was on the, we saw earnings come in for that. And if we want to look real quickly and see what's going on after hours with Facebook, you can just check there. And you can see right now, Facebook in after hours trading is up almost 9.5%. So obviously the street was very happy with the earnings that were reported for Facebook. And if we go back and let's look at that chart, and I'll make it big. There we go. I really like the look of this chart. You've got a 20-50-day EMA getting ready to have that positive crossover. That would give you a silver cross or an IT trend model buy signal. And we have a very consistent rally here. We have, it's not really what you would call parabolic. It's still pretty much a straight move, not overly steep. And the PMO isn't as overbought as it could be. It looks like it's trying to get into overbought territory. But when you look at these readings down here at the -4, 6, that tells me that you can still see higher readings on that PMO before it gets what you might consider extraordinarily overbought. I think the OBV is positive. Of course, you see the scooter is now moving into the hot zone, as I call it, above 75. That means that it has intermediate term internal and relative strength. Look up the StockCharts technical rank, and that is what the scooter is. And you can find out a little bit more how that works. But notice with Facebook, we're seeing that nice rise on the RSI. We're not at the overbought level at this point. So we're in the territory we want to see it in. Of course, we got that giant move to the upside today of 6%. It doesn't look like we can wait for a pullback here though necessarily, because we are at this point, if it does continue to trade like it has after hours, we're going to see a much higher move. And then let's see, Google was the other one that I was going to look at. And there we go. Really great day for Google. They did report positive earnings, and you know, with a 8.9% move to the upside, I would guess that that's going to be a breakaway gap. I wouldn't be looking at this as an island. It does look like we have some strength to come with this. We have a nice rising bottoms on the OBV at this point, rising tops. So I think that all looks positive right now for Google. And if we look at the weekly chart, there we go. I really like that it got above that 1300 level this week. That you can tell was going to be stiff overhead resistance, and it managed to get past that. You can see it avoided a negative crossover here with that 17 and 43 week EMA. And of course, the weekly PMO is turned up in positive territory above the zero line, and I like to see all of those. So I would be looking for a continuation of the rally here for Google at this point. All right, let's see. So we did look at our 5-month candle. I'm curious what our Swenlin trading oscillators are looking like right now. And we did get those in. And as you can see, they've been really, I know that you've been watching them as closely as I have, obviously. They've been really right on, I would say, as far as this bear market rally has been. It really has helped us stay away from these, even the short-term dips. It's been telling us the right information. Right now, though, I would be just a little concerned because we are in that highly overbought range now, it appears. And I usually 400 is about the top level, even in a bull market situation. So they don't look too interested in turning down just yet, though, Dad.
No, they don't.
So we'll see how much further they can climb. But of course, they're confirming right now this rally. You know, we talked about it last week that it seemed that the market was just avoiding a decline. You know, it seems like every time it would decline, it was going straight back up. And, you know, it does seem to be sort of kind of Teflon. You know, we're really not getting those declines. And as you've said, now we're starting to get some good news coming in economically as far as opening the country and such. And it does seem to be helping the rally move forward. But I know there's a lot of talk about an October surprise once all of these earnings are eventually reported.
October?
Yeah, I think somebody was saying an October surprise. It would take till October.
Oh, okay. All right.
Yes,
You know,
at that point.
one of the things that I notice on these this rally, you know, it's just still got lots of wide swings, even at this point, when you compare it to what the kind of movement we had before the February top. You know, it's still really pretty radical movement. And
Absolutely.
yeah.
You know, and we have made some comparisons, you know, back to the 1929 and how we had the giant drop in 29. And then we did have a really great recovery coming out of that going into 1930. And then the bottom dropped out once again. So
Right.
I still am, I'm cautiously optimistic right now, but it does, the market seems to be, you know, everyone's saying it's forward looking right now. Everything's getting priced into the market right now. There's a lot of optimism that when we do start opening that, you know, we'll see things get back to normal somewhat. They're talking about having Major League Baseball have a season this year for sure. So all
Yeah.
good news. And I think the market is pricing a lot of that in.
Yeah, there's no question. It's acting like a bull market for sure.
Yep.
And we're getting more and more.
Right. And one of the things generally, once I get out of the market like I did back here and cash out, I generally don't get back in until I really am more comfortable with the rise. But it does tend to make you lose a little bit on that first swing to the upside. This is probably the first time ever for me, after we've had one of these declines, and even as we were beginning to slide, that I started to inch back in to the market to take advantage of anything I can get out of the bear market was sort of my, that was really what I was thinking. And I'm pleased that I have, but it has taken a lot of, you have to be nimble. Um, and it does help when you have DecisionPoint Diamond reports, or we do a live trading room, Mary Ellen and I, Tuesdays and Thursday mornings. You just sign up for our free email list to get in on that. But helping, having these stocks presented to you out of a scan. And so I was going to just show real quick, I know we have a couple more minutes left. I ran one of my favorite scans. I adjust it almost every day as far as how I determine what results I want out of the scan. But I found a lot of interesting names on here, but what I'll do is I get all of these, and that's 171, and people are like, how do you get through 171 stocks? Well, I don't get through all of them in looking at a full chart, but I put them in a chart list, one I call scan dump. That's where I put everything that is going to be transient. I know anything in this particular chart list is it's going to be trashed. So if I want anything to stay, I need to move it out of this chart list, but it's a really handy place to just drop all of my scan results. So once I have them in there, I use the candle glance, and this lets me look at, right here, you can see there's 15 charts just on the screen. And I can very quickly look at what the PMO is doing and its location. I can see what my moving averages are doing. I can look for chart patterns, and that's pretty much what I do. I just start scanning these and look for those interesting patterns. I already know based on my scan that it's going to have the basic components that I need, which is the EMAs moving in the right direction, a scooter that's high enough. I know that the PMO has been rising. So all of these things I know going in as far as what's on that scan. So what I do is then I start looking for what looks like an interesting pattern. And let's see, anything popping out to you at this point? So far, I'm not seeing anything that totally, cats, this is one I have been watching. And this one was a diamond. Let's see, when was it a diamond? Because I want to know. And if I go here, I can view it all. I'm going to do a summary and look, and then we're going to have to close out after we look at cats. But cats, yes. So on this April 17th was when I had done cats, and here you go. So at the time it was priced right about here. I had, whenever I do my diamonds, I always put in a stop area just for information, where you might consider a stop, or just to give you some, the big picture. And so I had set it here, but we had all of these crossovers. We had a PMO that was going very strong. And now it looks like it's starting to digest this giant rally. So we'll want to watch this. If we get a symmetrical triangle, or if it gets flag-like, that might be the time to start looking at it. But that's about all the time we have. Dad, thanks for being here. And we'll look forward to next time. I hope that you'll all come back, and we will see you on Thursday mornings at 8 a.m. Eastern. Have a great weekend, everybody, and we will see you back here. Happy trading.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.